Welcome in, folks. Chris Temple, editor and publisher of the National Investor here. And again, just a few days left before we kick off Strategic Investment Insight Chicago for the spring version in 2022 here. Here on the website, you see the logo for the conference. If you've not already registered, please do so. If you're not going to make it in person because of distance or whatever reason, make sure you register anyway, because that way the panels and the companies and everything will be available to you. And speaking of the panels, I'm especially honored today to be speaking our first time with Lyric Hughes Hale. She is the editor of EconoView. You see that on the screen here as well. She has a consulting company called Hale Strategic Global Resources, and also does a podcast called the Hale Report. Much more than that, Lyric, you were the wife for years of David Hale, who passed away in 2015.
That's right. That's right. Who loved your show, by the way. It was one of the highlights of his year.
And I loved him. I never did meet him personally. I missed the show he was at last in Chicago. But I was sharing the anecdote with you earlier that as a young, literally about 20-year-old financial planner, trying to figure out what was going on in the world back 40 some years ago, your husband's work was one of the very first things that attracted me, because unlike the sales pitches I was getting from the mutual fund companies and insurance companies that, you know, when we had this huge sea change in the economy and in the markets back in 1980, Paul Volcker came in, he jacked interest rates up, and everything that had been going up for a few years went down and vice versa. Nobody could explain that to me. And one of the first people that I read that resonated was David. And so I've always remembered that. And I know in my files, I've still got some of his old articles. So here we are now, years later in 2022, and very much a similar situation going on in the world, where there's financial professionals don't know which end is up right now. Things have been upended for them, for their clients, for society. Inflation is back with a vengeance. We've got apparently the reversal of globalization. You know, in your work, Lyric, what are you telling people to do, kind of as an overview? Are these changes now aberrations, or things that are going to be with us for a while that we need to adjust to?
Right. I think, you know, one thing that is happening to me now all the time with all these changes is people say, what would David say about this current environment? And so I really have to think about that and think how he would view the world. But I know one thing for sure, he would take the wide view and the long view. He would not look at the ups and downs, the turbulence. He'd try to be looking beyond that to see what are the lasting changes. You know, for example, with COVID, is that something that's going to create changes in the economy for decades? Or once it's over, will we all go back to normal? Because there is this human need to go back to the status quo,
right,
when big events happen. And the same thing now for the war in Ukraine and Russia. In most wars last a year or so, historically speaking. If it's over in a year, will, for example, and I think this might be of interest to the people in your audience who follow resources closely, will Germany, for example, go into alternative energy, really, and turn back the power plants, the nuclear power plants? Or will they say, phew, we dodged that bullet. Now we're just going back and we're going to be, you know, focusing on hydrocarbons. The truth is, in the energy field, at least, we are doing just the same proportion of renewable to hydrocarbon-based energy as we were in 1999. There's been 0% change. So the world hasn't been changing all that much. And I think that maybe could be comforting or not comforting, depending on how you look at it. So, you know, maybe that's a way to start out the conversation, but you have to make energy front and center of everything that we're looking at, because it's inflation, it's food, it's all of those things that affect the modern world, where we have to share sources of energy. We don't produce it just for our own consumption anymore.
Right. Numerous times I've referred to a speech on a House floor given many years back by Marcy Kaptur. She's a Democrat congresswoman from Ohio, the longest serving woman in the House of Representatives, 40 some odd years, I believe it is. And she gave, I wish everybody in power today had this in front of them and would be beaten over the head with it daily. Because what she said back then, and I'm going back at least 15, 18 years, Lyric, is that this country is in serious trouble. You know, when it's the Democrats, it's shut everything down and throw up a bunch of windmills and solar panels, it'll all work great. Well, no, it didn't. It didn't work in Texas, didn't work in California, it doesn't work in most places. With Republicans, it's exploit, drill, baby, drill, and we'll worry about next week when next week comes. Neither one has ever had a long-term game plan.
Right.
For what are we going to do 2, 3, 4 generations from now? And her point was that we as a country are remiss in not having something as serious as the space program, the Marshall Plan at the end of the Second World War, whatever. Jamie Dimon just referred to that Marshall Plan analogy recently in saying that we're in a lot of trouble. You know, we've had so much underdevelopment. We've got a country that you and I were talking about this earlier before we recorded. We have less than 5% of the world's population. We just in America use 25% of the world's total energy uses. There's nothing sustainable about that. There's very little that's been done to curb that. And the whole world now, with other nations developing, the global appetite for energy just continues to rise, and no one has really put together a game plan for what to do about that. And I fear, and I've just called it the new energy crisis, that we've had so little planning, so little development. We've got a government right now that has made it fashionable to penalize banking institutions that continue funding oil and coal and gas before anything else is really ready.
Right. Well, you know, you have a situation, you know, what we were talking about, how globalization in many ways is unraveling. And during the past couple of years, when we faced all these challenges, global organizations have really not been able to rise to the challenge. First of all, for example, the World Health Organization, but they have no enforcement capacity and a very tiny budget. And also it's the International Energy Agency as well. But there are things that they could do that would help, I think, international coordination. For example, all of their data you have to pay for. What a crazy thing. Why wouldn't you want to make that taxpayer created information available to as many people who could use it? So I think although we're kind of swimming upstream in terms of the World Trade Organization as well, not having the teeth to do the things that it used to be able to do, there are still some beneficial things that these organizations can do to create a global, more of a global infrastructure, because no one country can do it alone. We're all interdependent. So this idea that globalization will completely go away, I think, is premature. We really are still going to be dependent on each other. The United States and China, the world's first and second largest economies, I think that if we completely split ourselves off from each other, you would see a world that was much less efficient, much more expensive, and not as a much poorer place. We'd be living in a much poorer place. So we need to find ways that we can overcome these differences, look at the global challenges, and identify what are the changes that are permanent and which ones are just temporary. And be sure we don't react to the temporary changes that are going on in the world today and make everything worse.
Well, that's a good point. And of course, we've gotten so accustomed to a world where costs were pushed down because of globalization, supply chains became cheaper, and in some ways, yes, more efficient. Right. We'll see how things turn out. You know, Ron Insana recently was giving an interview, and he was talking about the same theme as we are, Lyric, and he said it's going to be a very difficult transition if we really continue down this road, to go from a world where, especially where commodities concerned, and especially with what's going on with these sanctions with Russia and Ukraine and energy and so forth, and what Russia's doing with the ruble, you have to wonder if we've got some adjuncts of currency wars and commodity wars that are starting at the same time. But Insana's point was that if we're really going to go down this road and transition to a world where all countries have no choice but to produce and to secure supplies and things like that because of security and geopolitics, and not just on economics. That's a world we haven't been, none of us alive have seen that world.
Right.
And
That you've got significant additional costs
right.
in that world. And we're seeing military budgets increase and all of
Well,
that right
globally,
now.
yeah, globally, the first year ever, $2 trillion in military spending. So the military industrial complex, even if everybody else is upset about things, they're sure happy these days.
Yeah, I really recommend watching Eisenhower's last address from the White House. I think especially, I'm sure many young people have never seen that. And his warnings are, I think, very, very apt. But we also have to look at, is the world growing? Is it shrinking? Here's an interesting factoid. If, in terms of demographics, if China achieves its worst case and the United States achieves its best case in terms of demographic growth, then the population of the United States by the end of this century will be larger than China's. So just think about what does that mean? That's not that long from now. That's, a lifetime, but still that signifies a completely different world than the one that many people are imagining. So that's what I'm saying. We need to look really far forward to get back to where we are today. And we also need to look at economic history and geopolitics to see what happened in the past, although it doesn't always tell us what's going to happen in the future. Economists are good historians, basically, dealing with data of what has already occurred. But it takes another talent or ability to pull that all together to see what the trends are for the future.
Yeah. Especially as confusing as things are. You and I were talking earlier also about the recent conference. You had 2,000 registered investment advisors at this big ETF conference in Miami.
Right.
The columnist from CNBC, Bob Bassani, who was there reporting from there, he said that these people are terrified. It's like they don't know which end is up. They've not dealt with this before. We've got inflation the highest in 40 years, certainly not transitory like Jerome Powell said it was going to be. And now he's trying to figure out how to play fireman to get rid of the arson.
But I think it is transitory too. I'm going to be the curmudgeon here.
Okay.
And say that,
a curmudgeon.
No, but I think long-term demand is slowing and growth is slowing in all the major economies. I mean, China has gone from 8, 10, 12% growth. Their best case this year is 5.5. And they're never they might even slip into recession. Mm-hmm. We had very surprising GDP numbers this first quarter. So I'm thinking that maybe there was a time where you could have raised interest rates, but I think now it's too late. And it's too late, and it's only going to hurt things. It's not going to help them. I mean, the reasons for inflation had nothing to do, I believe, with monetary policy. So they can't be solved by monetary policy. You can't solve supply chain issues and geopolitics by raising interest rates. Here's something I'm worried about, I do think inflation will level off faster than we thought. We might even get into a kind of deflationary spin. I can see a day again where, Brent crude to be at $65 a barrel. And I think it'll happen faster than we think. But here's what I'm worried about more than anything else. It's not the way the real economy works, because that tends to smooth itself out over time. I'm worried about policy mistakes the world over.
Right.
Zero COVID in China. Look at how that is tearing that country apart. And I worry that and I ask this question of one of the Fed governors, what will happen if the Fed raises interest rates? Is that emerging markets who now have $100 trillion of debt that went haywire during COVID, dollar denominated debt, that they will now have to pay back. They're not going to be able to do it. It's going to affect them. And not only will they not be able to pay the debt and potentially default, they won't have money in their treasury to buy food. So we're looking at potentially monetary policy, creating a chain reaction that results in potentially global famine, especially in the developing world. So
Well,
that's
yeah,
a concern to me, a
yeah.
real concern.
You've probably not seen it yet yourself. I'll have to send this to you. My cartoonist comes up with a lot of goofy things because I start off with a goofy idea. And he's got Jerome Powell, John Williams, and other members of the Fed around the table. They've got a pile of Jenga sticks. So the Fed is now playing this game of monetary Jenga. They're going to see how many sticks they can pull out and hopefully not have the whole tower of sticks collapse. But I agree with you more than you might think, Eric, because I've said for a while, in fact, we had a little get together in the Chicago area last year where I was pushing back on some of the idea of we're going to have this rip-roaring multi-decade secular bull market for commodities. At the end of the day, prices will only be what the market can bear. And yes, Japan is already Japanified. Europe is going through its Japanification. We will end up there too. The question is timing.
Right.
The question.
By the way, what is inflation in Japan now? They haven't still reached their 2% target, and they're the third largest economy.
Yeah.
What's inflation in China? They don't have it. So we have it, Europe has it, but they don't. So it means that we're looking at things very, focused on the United States.
Yeah.
And of course, we are the biggest economy. That's appropriate, but it doesn't mean that's where things are going for the rest of the world. And we have a responsibility there, I believe.
I do too. And before the Fed's interest rate hikes really kill the organic economy, to your point, especially looking at the dollar, it's again near its highest in 20 years. And with what the emerging markets are the pressures, they'll likely break something in the markets again, like they did in 2008 before they break the economy, and the markets will take the economy down. And that's the way Jerome Powell will get back to his 2% inflation target real fast.
We were worried, that China one day would just dump all their treasuries, right? And of course, that's a silly thing because they would be shooting themselves in the foot if they did that, literally. But who's not buying and who is selling is Japan, our ally. So we have a meeting coming up, the Quadrennial Strategic Dialogues in Tokyo, May 24th, between Japan, the United States, Australia, and India. It will be very interesting to see what comes out of that meeting in terms of cooperation in that part of the world.
Certainly will. So as we wrap up, at least for today, and we're going to look forward to having you on a panel with us Friday night coming up. That's going to be a great treat. But as we wrap up for today, Lyric, with all that you do, all the outreach that you have, and I know you're getting questions just like any pundit, any economist, any broker, whoever, maybe more than most. What's your, I guess, for lack of a better way to put it, hand-holding regimen for people these days? Is it to just?
Well, you're talking like my brother who's just retired and is right. And he's worried. He calls me up and what's going on and what should I do and all that. And I really think nothing, because what's your alternative? And I do believe that American companies are going to have increasing productivity. You can see it in machine sales and so forth. I believe in technology and the future of technology. We're the place where all that innovation happens. So I think, and the kinds of efficiencies that were created working from home and so forth, how could you not be bullish on an economy that has this kind of employment level too, by the way? So even though things look this way and, I just wouldn't, you have to distinguish between noise and signal.
Very good point.
That's not easy to do, but I think for everybody, I think the year will end much more optimistically than it's begun.
Yeah. Well, let's hope that's right. One of my favorite statistics that I was taught is, teenage mutual fund salesmen by the old Pioneer Group and out of Boston, if you remember them. One of their sales pieces that they had to teach people about why you invest for the long term in good, solid companies. The worst time ever in history to have invested in the stock market, of course, was in the fall of 1929. And by the time the market bottomed in early 32, the Dow had dropped by 89%. yet 1 out of 3 publicly traded companies were hired during that time. They were new, they were innovative, they did things better than their peers, whatever the case may be. And we've got a lot of that today. I couldn't agree more with your point, Lyric, that this is still the most innovative country on the planet, with when they're allowed to work unfettered, the best people on the planet.
Right.
And yes, I think that all of this turmoil, honestly, and I've said this a million times recently to anybody who will listen, this is actually a better environment to be a long-term investor in, because now investors have to be investors. You can't, as I said earlier, close your eyes and pick any passive ETF strategy and figure it's all going to work out great. That's gone for a little while, I think.
Right. And I think not to be afraid of the new, the innovations, especially in decentralized finance.
Mhm.
That is something any investor needs to educate themselves on, because I do believe that's the future.
Yeah.
And the kind of that will also smooth out some of the conniptions we have going on because of the current central banking system. Central banks didn't always exist.
No.
The US, it was 1913. They don't need it. It's not necessarily so that we will always have the system that we have today.
Right. I would love it if the speculation and silliness got out of the crypto area and the good about those things emerged and did supplant the
There are
central
always,
banks.
yeah, just like in the internet boom, there are always some silly things that were
Right.
going on then, what pets.com, or I forget what, some of the
Sure.
really crazy things. But think about Amazon during that crash. Yeah. And they were able to, recover
Still here.
from that. But, a lot of the smartest people I know are in that area, and that tells you something.
Yeah, very true. Hey, Lyric, I greatly appreciate you spending a few minutes with us today.
Yeah.
We're gonna let people have a preview of you between now and Friday night. Folks, you don't want to miss this. Again, if you've not already done it, sign up so that you can listen to Lyric, our other panelists on Friday night. A lot of good stuff, a lot of interesting things in the world that we're going to do our best to sort out for you. So thanks again, Lyric. I appreciate it. I look forward to seeing you Friday.
Thanks for having me.
Yeah.